Hello and welcome to another episode of CTRM Radio, a podcast that is hosted by Comtech Advisory on ctrmcenter.com, the place for everything CTRM. Well, my name's Gary Vasey, and today we'll be talking about supplementation. This is a trend that we've been noticing for some time, where having a sunk investment in a legacy CTRM but requiring the business to be flexible and adaptable and move rapidly, some companies are going out and procuring software as a service apps in the cloud to supplement their existing legacy investment. What does this mean and how does it work? Well, we spoke to three vendors about supplementation, starting with Gen10 and Richard Williamson. Gen10's architecture is really based around the idea of supplementation. And so I had a very interesting conversation with Richard Williamson. Then we'll talk to Ion about their particular strategy around supplementation and what they're seeing in the market. I spoke to Andre Jaeger. And finally, we'll speak to Topaz, who basically sell a valuation and risk system into commodities and often find themselves supplementing existing CTRMs and ETRMs with that incremental risk management functionality. And there I spoke with Justin Howat about their strategy around supplementation. So with no further ado, let's get started. And we'll start with Richard Williamson, who's CEO and founder of Gen10. So Richard, thank you for joining us on CTRM Radio, and I'm very keen to get your views on supplementation because I know that Gen10 offers an ecosystem of solutions, and I guess that in that context you almost supplement your own set of solutions, do you not?
Yeah, that's right. I mean, you have your core commodity, well, you have your core CTRM sort of functionality, and then your broader commodity management functionality. And we have that in Commodity Manager with, it's a, how do we design it to make it modular so people could use the bits that they need. And if they have another contract management system and we need to bring that information in to make use of the rest of the tools that we provide, there's those sorts of situations. But, even within the same commodity class, you've got different geographies, different requirements, and because we're very focused on the if we can solve the operational boots on the ground, data processing workflow type situations, we're going to get the valuable data for the risk reporting by default from that. So, for example, providing a supplementary system for deal capture in petrochemicals. Do I need to build that? You could build out the optionality within our contract management form within that module, but to make it lighter weight and so that you can have it interactive and give it a multi-purpose really, by providing a deal capture app, you're free from any legacy and you can get it exactly how it's needed to make an efficient deal capture. And then the particular data points that you need to share with your CTRM system, whether that's our commodity management or somebody else's commodity management system, we can provide that information, through the APIs, web services. So it sort of frees up without having to make the monoliths bigger. Customers get a lot more agility, speed to market, and get it exactly how they sort of need. And that's not a custom job for a particular customer. It's an app which standalone has function. It enhances our overall system and goes to our vision of having an ecosystem rather than monolith. And it also gives us something to sell to someone who is not in the market for replacing their legacy systems just yet, but we can help them innovate and move forward with a digital transformation strategy. Without having to do a whole CTRM, replacement. So I really like the topic. It gives us agility. It gives us more product to sell, and it frees up our clients in terms of speed to innovation, I guess.
Yeah, it makes it very flexible, sort of a modern best of breed approach, I suppose.
Yeah, and that best of breed, I mean, I'm talking about how we've done our, Com OS being, our vision is the ecosystem rather than the monolith. So supplementary for us, but there's a best of breeds. Shall I say it? A best of breeds reporting tool. You know, having that this touches on interoperability very much. I mean, I like the supplementary thing. It says a bit more than interoperability, but it is underlying it's interoperability with other best of class things, whether that's an ERP system, Salesforce, CRM, and because what I think clients, well, I think clients want. I was at a commodities people event in Stamford, Connecticut, a couple of months ago, and the guy there was saying, I don't necessarily want one software that solves my problems, because I'm going to need to have compromise built into my wish list stroke requirements. I want a technology partner that can come and present a suite of options that give him the best of breeds and agility to his IT infrastructure, as opposed to trying to find that vendor that does everything. If I bring another vendor together to provide an overall holistic approach that's integrated, that's got to be of huge value. It's definitely the way the market is going, I think.
And my understanding is some of your apps are quite granular, so you can take like contract management or maybe something like lab analysis or something as a sort of standalone supplement piece. Is that correct?
So, if I take the lab results, so whether it's copper coils, steel rods, or it's bales of cotton, you have that heavy technical analysis across 12, 15 different data points that tell you the quality and affect the pricing of each of those bits, right? And whilst I would say, how we built our inventory module initially was to get that unit granularity already and be able to configure what parameters, attributes you need, and we provide that. But then when on looking at it, how you manage the granular data for Australian cotton or US cotton or Brazilian cotton, it all ends up being the same data, but there are different on-the-ground processes that people need to deal with, right? I mean, case in point, one of our supplementary apps, it's called Cotton 123, and that is, in Brazil, you have all of these different formats that this data comes in, and then they've got certain very Brazilian workflows related to it. Now, am I going to build, a few years ago, we'd be looking at how do we build that optionality into our inventory module? And then, that has knock-on effects. It's like, well, hold on. What does the CTRM system for its inventory management, and what do these people in Brazil need to manage their daily job more effectively? So really cool. We set up, because we have the building blocks for rapid application development. We build this product that, they upload the data in PDFs, Excel spreadsheets, text files, whatever, and we provide some AI to translate that, to clean the data and make sure that it's all good, and automatically analyze that data to say whether or not they want to buy that cotton, before it hits the inventory. So it's like upstream functionality to help to help the pre-trade type stuff. And so that freed us up to just solve those kinds of problems. You still have the workflow, you still have the combined, harmonized access control, roles, permissions, etc. But we could provide that, give its own analysis, and then when it comes to then integrating with, in some cases, it's integrating that information with the client's legacy system, or it's integrating with our inventory management module. We're able to provide that agile software digital solution for point solutions, without trying to make the monolith, be all things to everybody, if that makes sense.
It does. And what sort of opportunities are for supplementation around legacy, third-party legacy software are you seeing in the market, and what have you actually done to date?
Well, were you tying into a legacy system? I mean, that previous example, it's one very very specific, but again has utility in metals and coffee, whatever. The deal capture is
Right.
another one. You know, everybody sort of captures a deal, but sometimes you know the flexibility, the optionality, and the stuff that a trader doesn't like to be fit into a box. He needs to be created to get the best value for it for his customer, for his
Right.
counterparty, and for the company. And so I mean, it's not about having two versions of the truth by all means, you know, but providing something that gets him to collect the data, you know, without having to go through a whole contract screen with the standard T's and C's and other stuff that feed the position, etc. He wants to get his deal and his business confirmation out there based on his OTC discussions he's been having. And you know, giving him 100 fields to choose 10 from, you know, you provide a deal capture app that helps them do what they need to do. It has the email notifications, it has the digital workflow for approvals and stuff before it hits the commodity management and the position report. And then you have that API integration, which when the contract manager comes in and he sees the deal, he gets notified of the deal, clicks on the link, sees the contract, and he sees that deal capture information, but in the context of the full, more official contract.
Right.
So another example there. Yeah.
So you kind of see this area of supplementation not only as a way to extend a legacy investment of maybe multi-million dollars by supplementing it with new functionality around, but you also seem to see it as an architectural approach to developing software.
Absolutely. You know, you especially, I mean, we're blessed and we're cursed by the industry that we're in commodity supply chain, where, you know, it's what I forget what the word is, but it's the word commodity is like the antithesis of what commodity supply chain management is, right? Because there's nothing standard, geographical as well as commodities, and things are just traded differently in different places. Yeah, exactly. But you know, based on that, and you know, the years that we've been trying to solve the problems of improving data and flows through these supply chains, and the ability to share data further down the stream as well, that, you know, customer service is a key point. You know, it's marketing 101 for your standard business, but in commodities, you know, they got that much they got to deal with, and then the margins are tightening. Customer service is certainly, you know, how do we help our supply chain better? So that whole ecosystem approach of not trying to, you know, have this this ring-fenced, you know, protected monolithic system. It is about opening it up safely, securely, etc. But so whether it's an additional supplementary app of ours, it's somebody else's, or we're feeding to someone, or indeed sharing contract data in a structured format to my customer so he doesn't have to retype that. That's really good. And how we're able to sort of structure the flexibility of the trades, it means that we can do that pretty effectively, pretty efficiently, without having to wait for the industry to get together to standardize, you know, how do you price oil, or how do you price pie gas? You know, how do you manage lead concentrates? You know, and
terminology
these
for
are the
that,
fun
right?
projects we have to try and solve, right?
What terminology do you use for flexible standardization? What do you?
Well, standardizing the flexibility, I guess, is
standardizing the flexibility. That's one of the
you
key
can't
attributes.
standardize a thing because they need to be able to breathe, and they need to be able to find margin where they can, and they need to be able to adapt to customer needs, right? So trying to say, you know, we will never get the equivalent of a cotton futures contract. You know, computers love those. It's very standardized, and you can do that at volume. But a physical contract in lead concentrates or in cotton, you know, it's providing the option, providing the framework or the structure around the flexibility, the optionality that they need. and then how that affects your overall P&L, mark to market, and position, right?
Super. So it seems then that when it comes to supplementation trends, you've been there for some time. You innovated yet again.
Well, yes, thank you. But when you've been trying to solve these problems for so long, and you go through a couple of financial crises, global financial crises, etc., you have to adapt. Technology needs to change, and so the idea of maintaining a monolith to be all things to everybody, there's no way. There comes a time when you run out of runway on options on that, and the whole house of cards comes down, or you just say no, we don't do that. Right? Is another thing. So in terms of scalability, in terms of business model for us, I mean, also selling commodity management or selling additional commodity management digitalization without having to, bring front, middle, back office stakeholders all together. You can help with an app that helps one stakeholder, one industry player share information with people further downstream, and because our objective is not to provide CTRM software, it's to improve the flow of data and improve the process of getting these commodities shipped around the world on time and without losing money, right? So yeah.
Sounds good. Well, thanks, Richard. Thanks for talking to us on CTRM Radio. Very interesting. Thank you.
Okay, thank you, Gary. Speak to you soon.
Thanks to Richard. Let's move on now to talk with Andre Jaeger over at Ion Commodities about how Ion sees the marketplace and how they're looking at supplementation strategies. Andre, thank you for joining us on CTRM Radio this morning. The topic is supplementation, and in that regard, what are you seeing in terms of the marketplace, in terms of what's driving demand, and how are people supplementing solutions specifically?
Yeah, thanks, Gary, for having me, as well as, I guess, Ion on the CTRM Radio. So based on kind of our existing client engagement and the CTRM usually being at the center of the kind of commodity trading activity or commodity marketing, depending on their business model, we see, I would say, four main directions that are kind of driving some of the additional demand for new business capability. One of course, is energy transition, the power side, renewable fuels, renewable gases, and then carbon markets. Based on some of the disruption we have seen in the market and increased volatility, is definitely kind of the desire on a lot of clients to upgrade to better risk management from a pure financial risk reporting perspective. But the other big topic is, how do I manage some of the physical aspects, my supply chain? How do I increase visibility? It's a little bit that operational risk, understanding where your inventory sits, who you have contracts with. So big focus on that end, especially also in the combination with energy transition, where you kind of introduce some additional complexity by managing kind of still the legacy business, but then kind of getting into renewables. Then data needs is the third one. Easier to extract data, because there's a huge benefit to kind of have that available quickly. Decision making, we see more and more data demand on the client side. And then, of course, if you take it out, there's various other data sets that you want to combine it from weather, assets, then kind of use some of the standard tools on top. And then for some of the legacy business, the other big topic is, of course, automation and streamlining, new technologies. Everybody needs to do more with less at the end. So this is the four main drivers that we see, and that drives kind of the demand for additional capability itself.
Right. And I think we're seeing many of the same things, including particularly the data requirements. So what is Ion's sort of strategy then in terms of supplementing and building ecosystems, I guess would probably be the right way to describe it.
Yeah. So maybe let's talk a quick moment about kind of the demand that we, I guess, see in the commodities world. And almost feels, I don't know if it's a kind of religious kind of decision, is that kind of what is more beneficial for my business? Is it that single source of truth, and I kind of manage the full trade life cycle on a single solution? Or do I see kind of the benefits of a more distributed landscape where I have kind of very dedicated point solution and then try to integrate or do some of the aggregation, especially from a reporting side afterwards? And I don't say as an industry trend. I think over the years, now almost being 20 years in the market, I think at the same time as we saw clients pushing in either direction. So sometimes they're on that consolidation path because they see the benefit of that single source of truth, or sometimes they feel kind of, oh, it's too difficult. We want to move kind of more stuff out. And this is happening at the same time. So that's why I would not call it an industry trend. It's a little bit kind of what particular preference also from sometimes people that made positive experience in the past with one or the other setup. And I think the way how we look at it, kind of both approaches have advantages and disadvantages in that context. And depending where the client is and where sometimes a little bit kind of the grass is greener kind of idea comes in, because I think our industry is also very good at highlighting some of the challenges of the current approach and then kind of positioning whatever is being available on the client side. We on the Ion side try to kind of at the end cater both approaches. So we try to kind of understand how independent do you run a particular kind of business or a particular department or a particular however you kind of separate it from a profit perspective, from a workflow perspective, from a trade life cycle perspective, and then try to kind of figure out what is the best approach. Would we recommend in this case, oh, we should go kind of more that single solution approach and kind of add additional capabilities? Or is there something where we feel here's a particular kind of point solution that can fulfill that, especially at the beginning, where you say maybe it's still kind of we're in a little bit startup mode for that particular business. We want to actually keep it a little bit separate for some time. And there's also, we do a couple of variations in between. We see clients that really want to run that global business on a single CTRM. And they put a lot of effort in to kind of get everybody on board to kind of have a common trade life cycle, and they get a lot of benefits out of that. Another variation would be to say, oh, maybe I use the same solution, but then maybe run multiple instances of the same solution, get some kind of shared infrastructure, support SME functions, but still kind of run somewhat independent regional business or particular commodity business in that case. Or in other situations might be kind of completely independent solution. Although one good example that we did in this context is, for example, Carbon Zero. On one hand, of course, we want to push that into companies that currently don't have a CTRM, with having a dedicated kind of solution to support certificate trading. But this is, of course, also an option for any of our established clients to say that particular business at the moment is actually running decently separate for whatever reason. And I want to utilize kind of a point solution to manage the trade life cycle for all my certificate activity. So it's a little bit kind of, we try to kind of work with the clients. We have some of the ability to kind of provide choice because we have kind of big or larger kind of multi-commodity solution that have that global kind of capability. But we also have kind of smaller SaaS point solution where we can say in this particular case, probably makes sense to kind of use that. For us, it's of course important to kind of, even if we have multiple point solutions, to standardize some of that integration.
In fact, I'm smiling because, I've been in this business now almost 30 years, would you believe? And it's cyclical because, we've been through multiple cycles of, is it single solution or is it best of breed? And in essence, technologies and architectures like software as a service and APIs and all that kind of thing have just presented the problem again, but in a different context. I mean, we keep going round in circles. Oh, we'll do best of breed. Actually, no, single solution is best. And then actually single solution isn't working for us, let's do best of breed. And it's just a continuous cycle going around.
Yeah, I think memory is fading quickly, especially in that area. So it's like, I 100% agree. It's a cycle. And I don't believe there's right or wrong. There's, depending of how I run the business, there might be a better approach to kind of getting more value out of your solution architecture that you put in place. And as I said, we're happy to kind of cater into both directions, depending kind of how it works best for that particular client situation.
I think the thing is that the market maybe doesn't completely get that ION can in fact go in both directions, because you do offer a set of multi-commodity large-scale solutions, but you also have a number of software as a service light footprint solutions for specific niches as well that can be rapidly deployed on top or combined with or independently or standalone, correct?
Correct. I think a big focus of ours, especially if we talk about typical functionality that goes beyond that traditional CTM, that's of course something that we want to offer as a point solution, like shipping for with Softmar, or some kind of additional standalone risk capabilities with FEA, but then of course kind of offers somewhat of a standardized integration approach. So it's kind of that right mix, depending on, as I said, how the client's preference looks like. That could cover some of the CTM capability, like the certificate trading, but could be also adjacent functionality that usually are not covered by a standard CTM, where we say, here's some additional benefit, here's an independent solution that we can provide that nicely talks to the CTM for additional value and data exchange.
Right. And so maybe you could tell us a bit more about how you support each different client journey and experience.
I think the key for us is, and I think we kind of changed that quite a bit in recent years, is to be much closer to our clients. So I think one of the things that ION did, based on some of the acquisition that happened in the past, is we actually built kind of a strong community of clients, a lot of big names, a lot of large client. And there's a lot of kind of know-how and capability and kind of also vision where the market is going in that client base. And I think we have established kind of better communication and collaboration with our user community, user groups. We organize connection events. And I think part of that decision, do I need a point solution or can I do it on the CTM, is the right capability available in that core solution. And I think working with that community, especially in areas like energy transition or data extraction needs, or kind of going into new market that are previously didn't trade much, that gives us, I think, that ability to kind of provide some of the necessary capabilities early from a solution perspective. Mm-hmm. And that makes it then also easier to kind of add additional capability on the existing infrastructure. But in other cases, and this is how we evaluate then all of these kind of new capability, we try to kind of figure out, is that something that we want to kind of build as a shared capability across ION? Mm-hmm. Or is it something that we need to kind of build on individual ETMs? And this is always kind of looking around, kind of what is the user experience that somebody would get? Is that something that's feasible to be independent, or is it closely coupled to our existing functionality? And I think this is definitely a direction where we try to kind of be earlier ready for where the market is going, utilizing that strong community that we have on our solution. And then for us, it's just what is the best way to deliver. Sometimes it's independent. Sometimes it needs to be closely tied to the CTM to get a better user experience.
Andre, what do you see in terms of customers supplementing sunk cost solutions with software as a service?
I think across the board, there's definitely clear interest to kind of have solutions that have close to zero overhead, zero cost. You want to get the infrastructure, the upgrade, implementation should be all for free. And this is a little bit related to what I said earlier, is that everybody has to do more with less. On the other end, there's a certain amount of you get what you pay for. So it's a little bit kind of, especially with some of the point solution that are new in the market, is that what is that functional coverage versus kind of the shiny technology I get. And I think most companies that we work with kind of evaluate the option, what is the business value and the impact of the different direction. And sometimes there might be a benefit, especially for that new business opportunity that they're following, to kind of be a little bit more independent, but it's still kind of a broader evaluation. And this also includes then kind of what is the business fit of the existing solution? Can I introduce some of the new renewable stuff that I'm doing on my existing infrastructure, or do I need something else? And this is then what do I get from a cost value perspective? And what's the cost of running independent? And what's the benefit of integrating from the beginning in the existing commodity trading solution or in the existing landscape? And how much reuse do I get? How much cross commodity benefit I'm getting? Because eventually, usually it's not a sunk cost to kind of invest into kind of the existing solution, because that might be the backbone for a lot of your activity, but eventually you will have sunk cost if you kind of move back to that consolidation story, and you need to kind of move what you originally kind of or initially build out on a point solution and kind of pull it back into your kind of established trade lifecycle representation. And then of course you have some sunk cost because you replace or have to remove some of those solutions, as well as related investment that you have done in the past.
A lot of vendors talk about open APIs and that this magically makes integration so much easier. Is it your experience that that's the case, or is this still quite a complex problem?
I think open APIs and the ability to kind of programmatic exchange data is key. As it does not matter if you go in that single solution direction or if you have a lot of point solutions. So even if we have a global player that does their global commodity business on a single solution, there's probably still 20, 30, 40 types of integrations where data exchange is required. So I think it's important, especially the big clients that we serve, that we have that integration capability that's functional rich, high performance, more standardized ways to extract data, especially from a reporting perspective. We did a lot of work, especially in the direction of standardizing our streaming technology in relation to Kafka. And I think this is the way forward at the end, to kind of have that openness. The other thing that's key when we talk about APIs is, especially for the big clients, is that ability to kind of integrate some of their own IPs. And that might be a point solution, might be also a particular kind of business workflow or business functionality where they want to augment some of the standard CTRM capabilities with something where they feel I differentiate myself and my business in that particular area, and I want to swap that in and out. And then sometimes as a point solution, but sometimes it's just that ability to kind of do some level of customization or integration with the existing solution. This is definitely something that we see across the board as, I think, a key differentiator, especially of our bigger solution. That's where kind of a lot of the bigger clients take value out by combining that with their in-house IP, which in some cases might be a point solution that we talk and exchange data with.
Right. Andre, thanks very much for joining us. Been informative.
Thank you, Gary. It was a pleasure.
Thank you, Andre. Finally, let's talk to Justin Howat over at Topaz about how they sell their risk system as a supplement to existing ETRMs and CTRMs from time to time, and also to get his ideas and opinions on whether, in fact, open APIs help with integration of such solutions. Justin, thank you for joining CTRM Radio.
Thank you, Gary. Good to see you.
As you know, we're talking about supplementation of legacy CTRM solutions with software as a service and more modern solutions. And perhaps it might be good to start off by just having you tell us a little bit about Topaz and how you think you can supplement CTRM specifically for valuation and risk.
Certainly. So in terms of what our product and the functionality it offers, Topaz is a multi-commodity risk management and analytics platform, right? And this is both for real-time risk and for analysis and reporting at end of day after closing books, for traders, risk managers, middle office, product control, so on and so forth. And really the Topaz platform offers three products in one, if you like. So one is CTRM augmentation, which is today's topic, with superior daily valuation, risk reporting, P&L, positions, Greeks, VAR, everything you'd expect from the sort of front and middle office functionality in a CTRM, as well as the ability to close books, so on and so forth, that sort of stuff. Secondly, we've got trader tools, right? So this is for real-time valuations and risk reporting, what-if scenarios, things like the ability for traders to value option structures on the fly via Excel add-in, and so on. So that's the second one. Thirdly, we've got advanced risk analytics. And this is valuing complex option structures, physical and asset optionality, more advanced risk analysis, like stress testing under simulation, so on and so forth. Right? And I think that the key point for us is that designing and building risk systems in any market is a very niche skill. It's quite complicated to get right? Yeah. And we see it in the energy and commodities market. So, not many risk systems and CTRMs have in fact been particularly good at it. And, up to now, we've seen companies building risk tools around their core CTRM architectures with some Excel, some off-the-shelf BI tools, perhaps, and programs written in Python typically these days. And, dare I say, bubblegum and sticky tape often, So that's the problem with the guys who founded Topaz got together to solve back in 2015, right? They saw a gap in the market for a well-built performance system that can augment CTRMs for risk management. And in which they could apply all their expertise around trading, risk, software design, technology. And on technology, in fact, this includes applying a lot of the advances we've seen in the past few years in topics like distributed computing, containerization, Docker, Kubernetes, and obviously APIs as well, right? With any sort of legacy technology to worry about.
And for anybody that probably doesn't know Topaz, give us an idea about sort of current customer base and some of the problems that you've solved.
Certainly. So I mentioned sort of three different sort of areas that we provide, that the platform covers. And indeed, we are live at customers across multiple commodities, from oil, gas and power through to metals as well, and biofuels, for example. Now, a couple of our customers use Topaz as their system of record, and typically they'd be derivative trading houses, trading shops, right? And where we would be essentially the CTRM or ETRM. Others, and often these have been large trading, physical trading organizations who have an existing ETRM or CTRM architecture landscape, bring us in to augment their systems, right?
Yeah.
And again, that's our geographical focus has mainly been Europe. We have a Singapore office now with a large implementation which we've kicked off in Singapore. We have a few users in the US as well, but yeah, primarily we're Europe based at the moment. And as I mentioned, in terms of commodities, we have oil and energy and metals as well. Yeah.
We often say at Comtech that CTRM, ETRM is a bit of a misnomer, and perhaps actually we're partially responsible for that, but never mind. Because it's basically commodity trading risk management, energy trading risk management, and historically, CTRMs and ETRMs have been pretty deficient in terms of what we've come to know as risk management, particularly in areas like credit, more sophisticated modeling and valuation of physical commodities and even financial commodities, to be honest. So if you're operating with a legacy CTRM solution, where do you see that being weak in terms of risk management? What could Topaz bring to the table by supplementing that legacy solution that would help the users out?
I think a lot of the problem with E and CTRM implementations over it's the history of this industry have probably been arisen from the fact that often companies buy an E or CTRM to solve a risk management problem, right? That's the primary drive when they're selecting a system. But obviously they have to start with the nuts and bolts of logistics, back office. They have to keep finance happy with its, their integrations into ERPs and accounting systems. And I think the problem with that is that often they have to build and customize very carefully around their workflows and processes, right? It's very workflow heavy, if you like, and process heavy. Whereas typically risk management's perhaps more universally defined, what the consensus is on best practices, and it's not so business process specific. So I think people often by necessity, these projects have to focus on the former, and by the time they get to the risk management part, they're already very bogged down in the sort of nuts and bolts of those sort of middle and back office activities, if you like. And that's where we through the use of APIs, which I'm sure we'll cover in a bit, in terms of what we're able to do now with APIs, we find that the use case of having Topaz sitting on top of these CTRMs has been a very powerful one, and one which people are starting to see more and more is a very viable one, particularly because it means they don't have to rip out their entire CTRM legacy architecture, right?
They can probably invested a lot of money in it too. So
absolutely, and again, it's very tightly fitted around their processes. I mean, we've seen this a lot. So yeah, it's working out pretty well as a sort of commercial proposition for sure.
But I think historically, most CTRMs have focused on just basically basic position management, things like that. So if you want to do something a bit more sophisticated, and let's face it, most of the CTRM, ETRM solutions, if they're older than a few years, are probably configured to do end of business day type calculations, right? For risk management, whereas we're in much more volatile and fast moving markets led by geopolitical events over which people have little or no control. And so we see a lot of demand at Comtech for things like event-driven recalculation of risk parameters. More interest in basically stress testing portfolios and trying to do a bit of what if we're caught in this particular scenario, what would be the impact on our portfolio? So actually, I can see lots of reasons why somebody with a long-term investment in a satisfactory CTRM solution for a process perspective might want to enhance their risk solution and go with a supplementation option with something like Topaz. And that brings us to the next question, which you rightly anticipated, which is we hear a lot over here at Comtech about open APIs, and this makes the integration so much easier and blah, blah, blah. Really? How?
Sure. Now, the main point is that API technologies have evolved a lot over the last few decades, right? And so one of the evolutions is that now most API technologies are open source and they're free to use, right? And obviously there's a lot more programming languages out there, but people have come up with well thought out, independent, standardized descriptor languages, right? So they can be language agnostic now. It's very simple to do relative to what it would have been a few decades ago. There's also a very rich ecosystem now around the core frameworks that APIs offer. So you have communication tooling, code gen, documentation. A lot more is automated now in ways where previously you'd need a lot of expertise to be able to build these out. Now a lot of this stuff is done pretty much automatically, right? So, and the API technologies there's a few out there. They're evolving, and at Topaz, so are we, right? We're following that evolution, and we're continually, on the lookout for improvements and so on. So to give you a couple of examples, we're now using, at Topaz, we use two technologies. One is called OpenAPI, and the other is gRPC, right? And we use one or the other depending on the use case and requirements for the customer, right? So OpenAPI, for example, is pretty well known, right? It uses JSON, which is a common API format. It's used for interfacing data through REST APIs, which everyone's familiar with, the specification, and even down to business analysts and quant desks without necessarily very deep IT expertise. With basic tech skills, users can play around with the APIs, they can test them, so on and so forth. So it's quite easy. gRPC is an interesting one, and it's a use case which is important to us, which is all about speed and scalability, right? So gRPC is a framework using protocol buffers, and what they do is they serialize data in a binary format. But in short, the upshot is that payloads are smaller. It makes communication much faster between systems. So we use these for APIs which are more performance dependent. So for example, we have a module where we can run models built externally to Topaz, right? We call it the QDM, Quant Developer Module. And we use gRPC for that because there's a large amount of data having to go back and forth, and which we need to be very fast in terms of outputting.
Understood. So it's more performant.
Indeed.
Justin, thank you very much for being with us today.
My pleasure. Thank you very much, Gary, and see you soon.
Yeah, cheers. Thanks to Justin. In fact, thanks to all our guests, and thanks to you for watching. This has been an episode of CTRM Radio, an ad hoc podcast by Commodity Technology Advisory, hosted on ctrmcenter.com, the place for everything CTRM. My name's Gary Vasey. Thank you for watching. Please do share and subscribe. This is a new podcast on video. It's previously been audio only. And we'd love to have you subscribing to our YouTube channel. Helps us with everything to do with marketing and getting this information out to a broader audience. Thank you so much. Goodbye.